Nice to see you, David. A good Friday to you. What do you think of this acquisition spree that the Chinese oil majors are on, especially as they look at these, some would say, exotic areas such as Azerbaijan, Africa, Kazakhstan, etc.?
Well, I think it's not just that they're going there because they want to. I think you've got to remember that to some extent they're going there almost because the government has asked them to do it. China looks at acquiring reserves almost as a strategic reserve. In America, they have holes in the ground, they pour oil into it. That's their strategic reserve. China has taken a view, let's buy reserves abroad. It helps our growth in demand for oil, but it also gives us some protection against upsets in the oil industry. So that's what you're really looking at. And it says that there is government pressure on them to do this. And there are risks involved on the back of that because they are known to be the buyers of oil. So the risks are that people know they're coming, that they have to buy, and the prices might reflect that.
They might overpay for these assets, is that right?
I'm not sure you could say they'll overpay. There's an argument which says they will not be beaten on price, which says that they will always be able to go that little step further.
If that's the case, then why do you suggest buying into these Chinese oil companies if they can't seem to get assets at good value?
Well, we're not really buying into the upstream area, and this is where this is happening. So we're saying that in the upstream area where companies are having to buy assets and may pay a little bit more, be cautious. We're saying in China, the area to look at is the downstream, because that's the area where China is different from the whole of the rest of the world. Everybody in refining and marketing is making losses. Outside China, they're making money, because they have their own pricing system.
Well, yes, they do have their own pricing system, which is why some people say that refiners, especially in China, are handicapped because they can't determine what they charge at the pump to consumers.
Yes and no. I mean, the system says you will make a profit and we will guarantee it. Now, if you have a refinery outside China, in December, you were making losses. Now, where would you rather be? And there's no guarantee that the losses outside China will turn around in the short term. But if the Chinese system is allowed to operate, they are allowed to make a reasonable profit.
That's interesting, because Cnooc stock as a refiner fell a lot in the past 12 months. Actually, the gains aren't as good as, say, for the upstream players like PetroChina and Cnooc. So how does that make sense if you are allowed to make a profit, yet investors don't think you're making a big enough profit in China?
Well, the problem is, do you believe they will continue to allow? And many people are saying, well, the Chinese government introduced this system, the Chinese government could take it away. And they say the risk is too high. We don't believe that, because we believe that the Chinese refiners have to make money because they have to build refineries to keep up with the pace of demand for oil in China.